investors do? Those saving for retirement, what should they be doing to protect themselves? Can you imagine if we have a dozen Ebola patients contact? If we have a dozen people die, 2 dozen people die, one would can only imagine of the panic that sets into society and into investors.
Right.
How can one protect themselves?
Rick, the stock market often overreacts to things, crises, right? I mean, we saw the same thing many years ago with the SARS epidemic. People were afraid to fly, so airline stocks took a plunge, okay? Same thing on Wednesday. The Dow went down 460 points intraday. So at my firm, at Coastwise Capital Group, we were out there with our baseball caps on. We got our bats out. We were ready to play ball. We were putting money to work. Because, Rick, that's the opportunity. When people are scared, that is the opportunity to buy high-quality dividend-paying stocks on sale.
Contrarian thinking.
Well, not contrarian. If you look at the market, the airline stocks did rebound. I mean, everything closed flat yesterday, and today we were up.
Well, contrarian in a sense, they're down because people are fearful they're selling.
Right, but you've got to look. And okay, what you just said, the market was up this year. Last year, you could have bought an S&P 500 fund to be up 30% in a year.
That's amazing.
2013, we totally outperformed in any time in recent history in the S&P, not since the mid-90s, okay? But what does that tell you as an investor? Just like Warren Buffett says, be fearful when others are greedy. So the prudent thing was to be taking some gains off the table. I think many of the stocks were overvalued. So you have to look at the rest of the world to find out what's undervalued.
So you're not a buy and hold advisor to your clients.
Yeah, it depends what your objective is, right? So sure, buy and hold if you have quality stocks in your portfolio. But what seems to happen is most people are so U.S.-centric. They think the only way to grow their money is U.S. stocks. Absolutely not the case. You look at emerging markets, there are some great high-quality stocks on sale right now because of the global economic slowdown fears. A lot of these stocks, as I like to say, are on sale.
What about this Ebola scare? Is that from a financial standpoint, not to sound morbid here, but from people planning for their retirement, what opportunities does the potential of a panic in the marketplace, where does that create? Airline stocks, certainly one. Biohazard companies, what exactly would the opportunities be?
So with the opportunities, first of all, you need to protect and preserve the capital you already have in play, right? That's the number one thing. If you're concerned about your retirement, one of the strategies we use is covered calls, where if you already have stocks, you're getting income from the dividend. If you agree to sell it at a higher price in the future, you can generate income today, often 2 to 3 times the dividend. And that's your cushion, Rick, because if and when stock prices fall, you've now captured some income in advance to help offset. So first, you've got to protect your core portfolio. Second, when there are dips in the marketplace, these are your times to buy quality stocks. 2008, when everyone was running for the hills, calling their financial advisors saying sell, those people that kept buying as things get lower and lower, 2009 was probably their biggest wealth creation event in their lives.
That's amazing. Yeah, that's right, because of the opportunity. Now, let me ask you this final question, Laurie, as we're out of time. I looked at the market the last 18 months, and I said, I don't get it. Typically, the market forecasts where the economy is headed about 6, maybe 12 months in advance. Leading indicator. We have 93 million Americans who are not even included in the unemployment number. They've dropped out. They've given up looking for work.
Now,
part-time work is the new normal in America. People are underemployed. Yet we've seen Wall Street hit new highs, hit new records. Now it's pulled back these last 3 or 4 weeks. I felt that either the economy is going to boom or this market is going to crash. And I don't see the economy booming. I certainly don't want the market to crash. What's going on here? Why such a disconnect that normally doesn't exist?
I agree. There's a huge disconnect. And one of the reasons why we've seen such highs in the stock market is because the Fed Reserve Board has been keeping interest rates artificially low, which is great for borrowers, but terrible for investors.
That sounds like a bubble. That sounds like what happened to the real estate market 4 or 5, 6 years ago.
You never know if you're in a bubble until it pops, right?
Right.
But, we're going to say that's another pressure. They're going to start increasing interest rates, as you know. They've already reduced the bond buying, and this is what's going to happen. People have gone to stocks. They've been high in demand because you can't make a decent income on bonds. You can't make any income. You've got to be in real estate or the stock market. So you've got to be aware when these interest rates go up, bond prices will go down, and the market may go down.
Yeah. Well, it concerns me when I hear you say the Fed artificially keeping rates down, because anytime there's something artificial going on and it props prices up, That's a danger. It could also be an opportunity.
Absolutely.
All right, Laurie Itkin, author of the book, Every Woman Should Know Her Options. Every guy should know her options, too.
Yeah, they should.
All right. Thanks for joining us.
Thank you.
I think you're on a panel.
I am.
All right, very good.